Under the gray sky of Washington state, inside a seemingly ordinary industrial complex, a company is quietly developing artificial intelligence surveillance technology powerful enough to monitor the movements of an entire city. The company's name is Airship AI Holdings. This company is not just another camera manufacturer. Airship AI Holdings collects and analyzes data from video, audio, and multiple sensors in real time, turning every motion within a city into data. In short, it is a company that reconstructs the very pulse of a city into digital information. And this data is not limited to security. It transforms into national-scale intelligence assets. The company's core technology is built around three systems. The first, Outpost AI, is an edge device system that collects and processes data on-site using artificial intelligence. The second, Acropolis, manages this data at a centralized level by controlling access permissions and ensuring secure data integrity. The third, Airship Command, visualizes all this data, allowing users to view and interpret city movements in a real-time, map-like interface. These three systems operate independently but are intricately connected. Together, they merge every camera and sensor within a city into one massive data network. This is not simply a technological innovation. It forms the foundational infrastructure for national-level surveillance and control. As a result, Airship AI Holdings stands at the crossroads between technology and national security. However, what drew investors' attention was not just the company's technology, but rather the strange patterns hidden in its financial structure, management behavior, and rapid public listing. The story begins in 2003. The company was then known as JDL Digital Systems, a small video management software developer. It remained largely under the radar for years. In 2022, it rebranded as Super Simple AI, and just 1 year later, in 2023, it transformed again into Airship AI Holdings. Only months later, it completed a SPAC merger and went public on the Nasdaq. Typically, small technology companies require years of external auditing, investor due diligence, and regulatory screening before going public. But Airship's process was exceptionally swift, almost suspiciously smooth. The entire listing unfolded quietly yet flawlessly. This is the first mystery. Such abnormal speed suggests a premeditated, well-designed plan rather than a natural progression. After the listing, the company's movements became even more intriguing. In early October 2025, Airship announced that it had secured 16 federal contracts totaling $11 million with agencies including the U.S. Department of Justice and the Department of Homeland Security. The announcement, made during trading hours, immediately sent the stock soaring. Yet, just days later, when financial reports were released, investors were stunned. Revenue had indeed increased, but losses had grown even larger. In most cases, companies that secure consecutive government contracts benefit from economies of scale. Efficiency improves and profits rise. Airship, however, showed the opposite pattern. As revenue grew, losses expanded. This anomaly hinted at a deeper structural imbalance in its financial model. This was the second mystery. Then came another surprising move. On October 9, 2025, Airship issued a filing to induce warrant exercises. It offered existing holders an incentive to convert their 450 warrants into cash immediately, while simultaneously granting them new warrants at a $6.20 strike price. This maneuver brought in approximately $9.7 million in cash, but also increased the risk of share dilution through new warrant issuance. Ordinarily, such a move indicates a company facing liquidity challenges or short-term debt obligations. Yet Airship already had a healthy cash position. In other words, this may not have been a mere financing decision, but a calculated strategic move. This is the third mystery. Some investors speculate that the company may have been structuring ownership advantages for specific insiders under the guise of liquidity management. The pattern deepens when looking at profitability. Airship's gross margin exceeded 70%, a figure nearly unheard of in hardware-driven industries. Most hardware manufacturers struggle to maintain gross margins above 50% due to high component and production costs. Airship's consistent 70% plus margins, despite its reliance on one-time hardware sales, raise serious questions. Were government contracts priced far above market norms? Or did those contracts include undisclosed software deliverables? None of this can be confirmed. All contract details remain classified under national security restrictions. This forms the fourth mystery. CEO Victor Huang has been leading the company since 2004, becoming CEO in 2007 and chairman in 2012. Yet, after the company went public, disclosures regarding his compensation structure and equity holdings were only partial. In most public companies, executive compensation, share ownership, and stock options are clearly disclosed. Airship filings, however, left significant blanks. This is the fifth mystery: the lack of transparency precisely where it should be strongest. Despite these gaps, the company continued to release optimistic news. It was added to the Russell 2000 and 3000 indices in 2024 and reported approximately $13 million in revenue in the second quarter of 2025. Yet strangely, every time good news came out, the stock would spike briefly and then fall again. In a typical growth stock, positive announcements sustain upward momentum, but Airship's stock moved in sudden bursts, as if coordinated around event timing. This was the sixth mystery. Gradually, investors shifted their attention away from the company's technological potential toward the increasingly irregular financial patterns. Revenue keeps rising, yet losses persist. Contracts continue to flow, yet none are fully transparent. The CEO's shareholdings remain uncertain, margins remain abnormally high, and government contracts are sealed away from public scrutiny. Today, Airship AI Holdings has a market capitalization of about $180 million and employs roughly 50 people. On the surface, it looks like a small but powerful tech company. But beneath that surface lies a structure full of unanswered questions. Airship's artificial intelligence monitors the world's every movement in real time, yet investors cannot monitor what is happening inside Airship itself. Revenue rises while losses remain. Contracts multiply while details stay hidden. The reasons behind its high margins, the true purpose of its warrant issuances, and the real extent of its government involvement all remain locked behind the label classified. Airship AI Holdings, a name that may ultimately be remembered not for artificial intelligence, but for the unseen contracts and unexplained numbers behind its rise. The ValueStir channel invites listeners to share information on any stocks or cryptocurrencies, whether publicly traded, private, or soon to be listed, that you'd like to see investigated in future episodes. Please leave your suggestions in the comments. Your tip might lead to the next big discovery. Thank you to all our dedicated viewers who watch, subscribe, like, comment, and share our videos. Your engagement drives this channel forward and helps us uncover the truths behind the market. This was ValueStir.